All right, we have been seeing a range-bound market in yesterday's trading session. If we did see the Indian markets did end on a flat note and Nifty traded sideways for the better part of the day as well. But yesterday it did end with a marginal loss below that 25,100 mark. And if you look at the broader end of the markets, no support came in from there too. All of the sectoral indices also slipped in the negative territory, and we could see pharma and of course the realty pack emerge as the worst sectoral performers in yesterday's trading session too. But yes, coming to today's key earnings, we'll be watching out for the large cap IT name Infosys reporting its first quarter results. So far, the tier 5 IT giants have reported certain, pressure due to the weak discretionary spend. So we'll watch out for Infosys numbers too. Mid cap IT names will also be reporting their numbers. Coforge and Persistent Systems will be reporting the June quarter results. Apart from that, Dr. Reddy's and Tata Consumer are some of the other names too on Q1 results today. But yes, coming to the fund flows data, FIIs have stood as net sellers in the last trading session, selling about 3,500 crore rupees in the cash markets. They have been net sellers this month itself. So yes, we can see that the negative sentiment is quite persistent so far from the FII perspective. But yes, DII is trying to offset the negative sentiment by buying larger quantum of stocks, which is worth about 5,200 crore rupees in the cash markets. Coming to the Nifty put call ratio, that has fallen to about 0.84 from 0.96 levels in the previous session, and the stock which has been added to the F&O ban list, that is your IEX, and the stock that continues to be a part of the list that includes the likes of Bandhan Bank and RBL Bank. Now, just a couple of minutes before we go to the open, but let's take a look at how the pre-open rates are looking at this point. Sensex up about 250 points and Nifty also doing well above that 25,150 levels. But yes, a range-bound market, that is what is expected. But however, given that the US trade deal has been announced with Japan, the Asia-Pacific markets were doing good on back of that. Now, on that note, let's quickly get on board with our technical expert of the show. Joining me is Nilesh Jain, Head VP Derivative and Technical Research of Centrum Broking. Nirav, how does the markets look like? Yesterday we were slipped below that 25,100 mark. Do you believe we can defend 25,000 going ahead?
Very good morning to you, Lavisha. Absolutely. So yesterday, in fact, we did see a gap up opening, but soon after that, profit taking dragged Nifty near about 25,050 odd levels. Good part is that we have cluster of support at 25,050 DMA, as well as the psychological support is also placed at 25,000. On derivative front, if you see the data as well, 25,000 on the put side witnessed a fresh put writing yesterday. So looks like we are likely to defend those levels at least for this expiry point of view, this week's expiry point of view. And on the upside, 25,200 is kind of acting as a steady wall. We need a decisive breakout about 25,200 for any possibility of a short covering rally towards 25,400 to 25,500. But yes, it's more sort of a consolidation that you have rightly pointed out. We are expecting Nifty to oscillate in the range of 25,000 to 25,200. That's the 200 point trading range from intraday point of view, as well as going forward. Whichever side it will break, we can expect a decisive move in that particular direction of 200 to 300 points. Looking at the volatility index, India Weeks, which fell yesterday by 4% to end below 11 at 10.75, it is very much in the comfort zone for the bulls. And the overall Weeks is not indicating any sort of a major crack from here. Now coming to Bank Nifty, yesterday we did see kind of a sell-off across all indices. The broader markets were also under pressure. The Bank Nifty also witnessed a bit of underperformance compared to the Nifty index, but the structure-wise, Bank Nifty is still looking positive. Till the time it doesn't break below 56,000, the outlook remains positive with a buy and decline strategy. But for the day, I would rather focus on sectors and stocks rather than index.
Okay, but yes, India wicks comfortable levels. That is a good sign for the bulls going ahead. What about the broader end of the markets? How do you believe the trade to go from the mid cap and small caps perspective, Nilesh?
Broader markets, we are likely to witness this possibility of a further consolidation to continue. Yesterday, we did see small cap, mid cap, both the indices traded under pressure, similar to the benchmark indices. So, some bit of underperformance, yes, that cannot be ruled out, because in this kind of consolidation, we are likely to witness a shift in the focus towards large cap over mid and small cap. So some bit of consolidation is something that we are expecting is likely to continue. And just one more point I want to highlight. As of now, the FIIs have a short position of 86% in the index. In terms of contract, over 1.5 lakh contracts are on the short side. So there could be possibility of a huge amount of short covering that is very much due. Historically, we have seen whenever FI long short ratio inches closer to 14%, 13%, that basically triggers a kind of a 500 to 1000 point rally in the Nifty index. So given this kind of a setup where the markets are slightly oversold, there could be possibility of a short covering move, and even in the broader market, there could be possibility of a pullback.
Okay, short covering move, that is what we need to watch out for as well. Nilesh, what about the Nifty Pharma Index? Yesterday the index was witnessed quite a bit of a selling pressure. Even from the start to the end, the Nifty Pharma Index did not do well. So down for the third straight day. How do you view Pharma Index on the back of some of the results which will be announced today as well? Dr. Reddy's on the anvil.
Right, Lavisha. So structure-wise, if you pull up last 3 months chart, you can clearly see the pharma index is gradually inching higher, forming a high top and high bottom formation. So that means the swing low this particular index has formed, Nifty Pharma Index is somewhere around 22,000. Currently, it is at 20,300. So from here, there is another possibility of another 100 to 200 point fall in the Nifty Pharma Index. That cannot be ruled out, but that can be a good opportunity to start accumulating the quality pharma stocks. Names like Divi's Lab, maybe Sun Pharma being a heavyweight from this particular space, that can also be added on declines. So selective focus should be there in the pharma space. Broader structure for the Nifty Pharma from a positional point of view looks positive. But yes, looking at the immediate trend, look, there could be possibility of another round of selling going forward to continue.
Another round of selling could be possible for pharma index. Let's also talk about Nifty Metal Index, because that is showing a little bit of an optimism. However, it did succumb to some of the selling pressure which was there in the market yesterday. Nilesh, any take on the Nifty Metal Index? How do you expect the near term to pan out for it?
See, Lavisha, we have a slightly positive outlook on Nifty Metal space. We have already covered this particular space with our client. We are a little bullish in the Nifty Metal space from a short-term momentum perspective. As far as Nifty Metal Index is concerned, which is currently at 9,530 odd levels. So here, if you look at the support, which is placed at 9,300, and we are expecting a momentum towards 9,800 to 10,000. So within this space, couple of stocks that we are liking. First of all, Jindal Steel and Power, JSPL. We are bullish on this particular stock towards 985 to 1000 plus kind of level from a short term perspective. 935 should be the stop loss for the long position. Apart from that, Hindalco, within aluminum space, Hindalco and Nalco, both the stocks are looking positive. As far as Hindalco is concerned, we are expecting a short term momentum towards 710 to 730 on the upside. With a stop loss below 670, Hindalco can also be bought on declines.
Hindalco stock to be bought on declines, but let's take one stock in focus, that is your Paytm, because the company did post its first ever profit of about 122 crore rupees in the first quarter. So this was a sharp turnaround from a loss of about 839 crore rupees in the quarter last year. And even if you look at the profit, that's supported by a rise in the other income, and revenue has also grown by about 28% on a year-on-year perspective to about 1917 crore rupees. Other brokerages have reacted. They're quite positive on the counter. If you look at Jefferies, they've upgraded the counter to buy, and they've raised the target price to 1250 rupees per share. They believe that they expect that the continued profit growth from revenue upside and operating leverage, and they believe that the valuation is at a discount in comparison to PB discount, so that offers some compounding returns going ahead. Another brokerage firm, Citi, has also given out a buy rating on the counter, and they've raised the target price to about 1215 rupees per share, and they believe that the merchant business is performing quite well, while the consumer business recovery is underway. On the other hand, if you look at Bernstein, that has also given out an outperform call. They believe that the future profitability will be dependent on the sequential revenue growth. But yes, past 1 month, from a stock perspective, it has been good for Paytm, up nearly 20%. Nilesh, what can we expect for the near term, and of course, any target levels that you're watching out for?
Well, Lavisha, a very good set of numbers, and certainly we are witnessing a positive move on the back of that as well. In fact, we have already seen a good momentum in last 5 consecutive weeks. Now this has been the 5th consecutive weeks of gain for this particular counter, and so far in this week we have seen a spurt of over 5%. And if you just pull up the Paytm chart since listing, you can clearly see this is the first time after 2021, almost after a span of 3.5 years, the counter has taken off its important level of 1070 today. Now, looking at the overall setup, we are expecting a follow-up move to continue towards the levels of 1200. 1150 to 1200 can be a short-term target for this particular counter. But we are not advising to buy after gap up opening of over 3.5% today. Not advisable to chase at high level because the risk and reward is not favorable. But for those who are already holding the long position, can continue to ride this particular momentum towards 1150 to 1200, and a fresh entry can be done on declines, and stop loss for the long position should be placed somewhere around 1040.
Okay, all right. 1200 levels. That means that another 10 or 11% upside we could see on Paytm as well. All right, just less than 15 seconds to go before we hit the open. But yes, anything interesting that you're also finding on the charts, Nilesh? Just a quick takeaway before we hit the open.
Something that is looking positive in insurance space. So HDFC Life, SBI Life, in fact, watch out for these particular counters. We are bullish for HDFC Life for further momentum towards 775 to 780 from a short-term perspective. 740 should be the stop loss.
Okay, all right. Insurance space that we need to watch out for. But yes, we are opening on a positive terrain. Nifty up about 0.3% above that 25, 150, 140 levels. So yes, we have started off positive, but we'll watch out whether or not we, sustain this positive momentum of the above that 25, 100 mark. But yes, Sensex also opening with about 265 points gain. 0.3% gains coming in from the Sensex perspective too. If you look at the mid-cap index, that is also indicating a flat trade, but however with a positive bias for the mid-cap index. Let's take a look at the small caps, how they have been doing. Small caps have slipped into the negative territory, about flat with negative bias coming in from the small caps perspective. On the other hand, Bank Nifty has opened in the green once again with about 0.1% gains. Nifty Auto seems to be doing well with about 0.4% gain. We did see that Japanese auto stocks have been doing quite well. So we can see, maybe a little bit of a rub-off effect on the Indian stocks as well. 0.3% gains coming in from the Nifty Auto Index. If you look at Nifty Oil and Gas, which has been succumbing to some of the selling pressure, has opened up in the positive territory, but very slim gains from a sectoral perspective. On the other hand, India VIX continues to remain in depressed levels, like Nilesh was talking about, that any comfortable levels of India VIX could indicate that some bullish sentiment would be prevalent in the markets. Let's now take a look at some of the large cap gainers and movers. The first one is your gainers, that is your Bharti Airtel, topping chart with about 0.8% gains. Other than that, we can see Tata Motors doing well with about 0.7% gain. Maruti Suzuki, Shriram Finance, also some of the top gainers on the Nifty 50. Now let's take a look at some of the losers. ONGC on the with about 0.2% decline. Hero MotoCorp, Tata Steel, also some of the losers on the charts of Nifty 50. But yes, advance decline ratio, we can see that the advances have taken an upper hand in this market, but we'll watch out, if this recovery sustains throughout the day also. Let's take a look at how Paytm has been doing after the good performance. It's opened with about very slim gains, 0.1% or so. Right now, we'll see whether or not this extends throughout the day. Let's take a look at how Dixon Tech has been doing, because that also reported some good numbers for the June quarter. We did see that the revenue has jumped about 95% on a year-on-year basis. Now, this is the first sub 100% top-line growth in 5 quarters. But yes, net profit has surged about nearly 70% on a year-on-year basis. So yes, Dixon Tech doing well on back of that. 1% gains coming in there. Let's take a look at how some of the brokerages have reacted. Nomura has given out a buy call on the counter, and CLSA has given out a high conviction outperform call on the counter, because they believe that the future growth is expected to come from Vivo GV joint venture, exports and other segments too. Management commentary has been also quite bullish on the back of FY26, and they believe that mobile components is expected to surge going into in the upcoming fiscal year. But yes, how the stock has reacted so far this year, the stock has been underperformer. Today the stock has been doing well, but so far this year on a YTD basis, the stock has declined about 6% or so. Nilesh, what is your outlook for Dixon Tech? Anything that you're watching out for?
We have seen a decent correction over the period, but now if you see last couple of months, the stock is making an attempt to witness a sharp rebound from the lower levels. In fact, if you just pull up last 6-month chart, the stock has also given a good breakout from its triangle formation. In fact, the breakout came yesterday itself. So structure-wise looks positive. A gradual up move is something that we are expecting in Dixon Technology, and short to medium term target comes somewhere around 17,200 to 17,800. Buy on decline should be the strategy in Dixon Technology. It is trading well above its all long term and short term moving averages, so that itself shows that there is a positive undertone in this particular stock. 15,600 is acting as a very strong support. That should be the stop loss. And we are pretty bullish on this particular counter towards 17,200 to 17,800.
All right. That is the view coming out on Dixon Tech. Let's also address Colgate. The stock has not been doing well. We did see an earnings miss for the June quarter on all parameters. Net profit fell for about 12% on a year-on-year basis. Top line also saw a contraction of about 4.2% decline. EBITDA also declined about 11% on a year-on-year basis, and margins narrowed by about sharply with about 240 basis points. Majority of the brokerages have also retained their reduced call on the counter. HSBC have given out a hold call on the counter, and they've cut the target price to about 2,600 rupees per share. They believe that the EBITDA margin decline as the company controlled the A&P expenses, and of course Nomura has also given out a reduced call on the counter, and they believe that weak demand and high base drove the volume decline going ahead. But yes, the stock has not been doing well, and so far this year also the stock has been an underperformer. It has declined about 13% or so. Nilesh, for Colgate Palmolive, do you expect the pressure to continue? What kind of fall are we anticipating?
Absolutely. Right. So Colgate Palmolive, one of the underperformer within the FMCG space. It has a very weak structure on the technical front. The counter is constantly witnessing a downtrend, forming a lower top and lower bottom formation as well. So yesterday, post numbers, we did see a negative impact in this particular counter, and today we are witnessing a structural breakdown. So looking at the overall structure, it looks like it is heading towards 2250 to 2200 on the lower side. So sell on rise kind of structure, it is not advisable to take any contrabet as of now. Better to stay away from taking any sort of long position in this particular stock from a short term perspective.
All right, let's also address some of the viewer queries that is dropping on our live feed. The first query coming in from Naveen is asking what is the fresh entry levels for Bharat Electronics. Past 1 month, the stock has entered into a consolidation mode, but so far this year the stock is on a structural uptrend. Nilesh, anything that we need to watch out for Bharat Electronics? Any fresh entry levels you would advise?
See, if somebody wants to play a momentum or a pullback from here, yes, a long position can be initiated at current level, keeping a stop loss below 395. So 395 was the recent, in fact, 391 precisely. This particular level is acting as a very strong support. So we can expect a pullback move towards the levels of 415 to 420. So purely from a trading perspective, a long position can be initiated at current level. From a positional perspective, I think one can accumulate this particular stock over the period. We can expect a gradual up move towards 450 to 460 kind of levels on the upside. So structure wise, yes, these are the good levels to make a fresh entry.
Okay, good level to make a fresh entry at this point. Then Naveen is also asking the view on Titan. He's been his average price is about 3,600 rupees, and he's asking whether he should hold, exit or average at this point. Yesterday we did see the stock did well, but today once again it has fell with about very flat in the red at this point. Nilesh, anything on Titan?
See, Titan, in fact, if you see this particular counter recently formed a short-term base near about 3360, 3370. So that level is acting as a very strong support. That's the 200-day moving average support as well for this particular stock. So if somebody wants to play from a short-term trading perspective, then yes, we can expect a pullback towards 3550 to 3600. But gradually, if somebody has a time horizon of more than 1 year, then these are the good levels to start accumulating. Averaging can be done, but wait for further dip towards 3350, 3360. If it comes in that particular zone, that's a good entry point in terms of averaging. And existing long position can be held with a stop loss below the same, and we can expect a gradual up move towards 3600 to 3650.
Gradual up move to 3600 for the stock Titan that we need to watch out for. Let's take another viewer query. Bharat is asking the view on Tata Motors. The stock seems to be doing quite well today, 2.5% gains coming in there. But yes, from June to July, the stock has been oscillating about 600 to 650 zone. Nilesh, anything that we need to watch out for? The stock is up today.
Right, today, in fact, Nifty Auto Index itself is up over close to 1%. And if you see, two-wheeler space is doing well, specifically Bajaj Auto, TVS Motor are these stocks that are looking positive. But coming to Tata Motors has been one of the underperformer within the auto pack. Some pullback, and this pullback may extend towards 700 to 720. So from a trading perspective, These are the good levels to make a fresh entry, keeping a stop loss below 670. One can play pullback towards 720 to 730 on the upside. Again, if somebody is looking to make a fresh entry from a longer term perspective, then too it looks attractive at current level. We have seen a decent correction all the way from the levels of 1165, and currently it is at 700 levels. So over a 50% correction we have already seen. Now the stock is making an attempt to rebound and witness some bit of recovery in this particular stock. So yes, looks positive at current level from a risk and reward perspective.
Okay, all right. Current level looks attractive for Tata Motors. Let's take a another viewer query. Sandeep is asking the view on Tech Mahindra. What is the near-term levels that can watch out for? Nilesh, anything on Tech Mahindra, because the company did deliver Q1 results which disappointed investors, and the stock is down about 7% in the past 1 month.
See, Nifty IT space as a whole is not doing well as of now. Today, Infosys will come out with the numbers. We need to see how that will impact the Nifty IT space. But as of now, overall, the broader structure of the Nifty IT index is looking most kind of sluggish as of now. So it's an avoid taking any contrabet in IT space as of now. We are as of now cautious on the IT space as a whole. But Tech Mahindra, as far as the stock is concerned, has a strong support at 1500. Keep a stop loss at 1500. If you want to stay put, then that should be a stop loss. Any pullback towards 1600 to 1650, use that pullback to exit from the long position.
Okay, exit from the long position. All right, let's take another viewer query then. Priya Pratap is asking the near-term target levels for Eternal. She's bought the stock at 270 rupees. Of course, in the past 3 days, the stock has seen a good momentum on the back of its first quarter results. The stock is doing well in today's trading session, and in just 3 days, it's up about nearly 17% or so. Nilesh, what are the next target that you're watching out for Eternal?
Well, very strong setup can be seen in Eternal, and we have seen a very strong set of numbers in this particular stock as well. A big gap up opening was seen yesterday. Today we are witnessing a follow-up move. In fact, it has hit a new record high as well yesterday. So overall, looking at this setup, we are expecting a follow-up move to continue towards 325, 340 levels on the upside. So further momentum can be seen in this particular stock. Keep a trailing stop loss in order to protect your capital and appreciation both at 292. So that should be your trailing stop loss level. And one can ride the momentum towards 320 to 345 on the upside from a short to medium term perspective.
Okay, 345 rupees from a short-term perspective for Eternal. Let's take another viewer query. Soumya Reddy is asking the view on Garden Reach for the next couple of weeks. For the from May to first half of June, the stock did well, but now it's entered a consolidation mode. Nilesh, anything that we need to watch out for the next couple of weeks?
We are witnessing this short-term momentum on the lower side. Counter after hitting highs over about 3400 is slightly moving lower, constantly forming a lower top and lower top formation as well. So looking at the short-term structure, looks like it is heading towards 2550 to 2500 on the lower side. Although the momentum indicators and oscillators have gone into extremely oversold territory, there could be possibility of a pullback, but do not expect any V-shaped kind of recovery in this particular space. In fact, this space is witnessing a bit of selling pressure at the high levels. So better to stay away from taking any contrabet. If you have already bought it, then keep a stick stop loss at 2580 for the long position, and exit on pullback should be the strategy if bought it purely from a short-term perspective.
Okay. All right, that's the view coming in on the counter. Let's take another viewer query. Satya is asking the view on Saga Cement for a fresh long position. Saga Cement's past 1 month has been doing quite well, and so far this year also the stock has been in the green itself. What is the next target that we need to watch out for Saga Cement, Nilesh?
Well, Saga Cement, which is currently trading at 257 level, and if you see the structure of this particular counter, it is constantly witnessing a bit of selling pressure recently. But if bought it purely from a positional perspective, it has a very strong setup from a positional perspective. This decline, in fact, giving a good opportunity to start accumulating this particular counter. If at all it falls in the range of 240, 230, that can be a good entry point in terms of making a fresh entry. If already bought it, then keep a stop loss at 235, and gradual up move towards 275, 280 can be seen in the near term.
Okay, all right. That is the view coming in. Saga Cements. Let's take another viewer query. Abdul is asking the view on Polycab India. Polycab India, June lows, the stock is up about 18%. Strong first quarter performance, double-digit growth from top line and bottom line as well. Nilesh, what is your view on the counter? How much of an upside can we watch out?
See, from a short-term perspective, the counter has reached the over territory. Recently, we have seen a good momentum in this particular counter. In fact, this has been the fifth consecutive weeks of gain, a months of gain, I would say. So in this particular stock, so some bit of profit taking that cannot be ruled out. But purely from a position perspective, it's a good portfolio stock, and we can expect the levels of 7,400 to 7,600 in next 4 to 6 month kind of time frame. But as of now, at current juncture, it looks like there could be possibility of some bit of profit taking, which can drag this particular stock towards 6,800 to 6,700 as well.
Okay, some profit booking could be on the anvil then. Let's take another viewer query. Dipankar is asking the view on Paradeep Phosphates. The stock has been doing well from the past 1 month, but from a near-term perspective, Nilesh, anything that you're watching out for Paradeep Phosphates?
It has been in a very strong uptrend. In fact, post listing, we have seen a good momentum in this particular stock. So structure wise, yes, still looks strong. If already bought it, then keep a trailing stop loss at 182, and one can ride the momentum till 200 to 210 from a short term perspective. Since we have already seen a spurt of over 12% this week itself, so not advisable to chase at high levels because the risk and reward is not favorable. So in terms of making a fresh entry, avoid taking any sort of aggressive long position at current juncture. Wait for some meaningful decline towards 180. That can be a good entry point. But existing long position can be held for 200 to 210 on the upside.
Okay. All right, that is the view coming in for Paradeep Phosphates. Let's also address one stock which is buzzing in trade, United Breweries, with about 1% gains. We did see that the company has reported its first quarter performance with net profit modestly rising about 6.4% on a year-on-year perspective, and revenue grew about 16% on a Y-on-Y basis. The stock is once again trying to build up its momentum, which is up about 5% so far this month, and today also the stock seems to be doing well. Nilesh, anything that we are watching out for United Breweries?
See, in last 1.5 year, the stock has traded in a very tight range. 2,200 level on the upside has acted a very strong resistance zone for this particular counter, and 1,800 has provided a strong support as well. So that's the broader range of close to 400 point in this particular counter. We are not expecting any major move on immediate basis, although we have seen a bit of attraction today, and this pullback may extend towards 2,150 to 2,200 at max. But I would advise to refrain from taking any sort of aggressive long position in this particular stock as of now. Purely from pullback perspective, somebody has already bought it. Then one can keep a stop loss at 2020, and upside may extend towards 2100 to 2150.
Okay, all right. That is the view coming in for the counter. Let's take another viewer query on that note. We had a viewer query on 360 WAM. 360 WAM, the stock is not doing well today, but yesterday also we did see a block deal where we saw that BC Asia Investments have offloaded about 5% stake or so. From a near-term perspective, what is your view on the counter, Nilesh?
Lovisha, you are talking about 361, right?
Yes,
Which
yes,
is currently
361
trading at
WAM.
right 1132 level. So if you just look at this particular stock, recently we have seen some bit of profit taking. There was a volume and price spurt a couple of days back, but today looks like it is witnessing a bit of profit taking. So if you just look at from a positional perspective, any dip from here can be a good opportunity to initiate a fresh long. In terms of making a fresh entry, 1050, 1080, that's a good range to make a fresh long. But if somebody has already bought it, then keep a stop loss at 1120. That's the immediate support for this particular counter. From a short term perspective, is not looking that attractive, but yes, from a positional perspective, buy and decline should be the strategy.
Buy on declines will be the strategy for 361 WAM. All right, just one last question before we let you go, Nilesh. What are your top picks at this hour? We are seeing Q1 earnings season unfold, and of course a range-bound market which is quite prevalent.
Right, Lovisha. So couple of stock-specific action is something that we are focusing. So couple of stocks that are on our radar on long side. So first of all, we did mention about auto space. We have seen a good momentum in the Nifty auto pack as a whole. So Mahindra and Mahindra is something that is looking positive on the chart, and we can expect a follow-up move to continue towards 3,340 to 3,380 levels on the upside, with a stop loss below 3,245. 3,245 should be the stop loss, and 3,340, 3,380 kind of levels can be seen in the Mahindra and Mahindra, this particular counter. Apart from that, another stock, that's the broking counter, Angel One, we are witnessing a strong pullback in this particular counter. So this pullback may extend towards 2,900 to 2,930 on the upside. So then that pullback can be played keeping a stop loss below 2,800. And yes, Angel One looks positive purely from a pullback perspective.
All right, those are the stocks that we need to watch out for. But with that, we have to let you go. Nilesh, thank you so much for your time and joining us.
Thank you, Lavisha.
All right, let's take a quick check of the market.